All right, let's take a look at how the rupee actually ended the day. The rupee continued to decline against the dollar today. It hit a 3-month low and sank to its lowest level since 13th September. Analysts are eyeing the winter session closely and are expecting more volatility as it gets off to a stormy start. Rising commodity prices, inflation, etc. continue to weigh on the domestic currency, and rupee ended the day at 55.53 to a dollar. Let's discuss where the direction of the rupee is going forward and what should you do as a trader. Abhishek Goenka, CEO of India Forex Advisors, joins us over the phone line from Mumbai. Abhishek, thanks a lot for joining us. The rupee has actually been declining, in almost a straight line. Every day we are looking at lower levels being achieved on that one. Is 56 to the dollar the next level to watch for?
Of course, Ajay, we have been consistently bullish on the US dollar. I mean, you have shown the last 1.5 years, and we still maintain the dollar to become stronger. As a company, we have maintained our view of 56 by December, 57 by March end, and possibly 60 by the next year. Obviously, we'll be seeing 2-3 rupees of corrections in between, but overall, we are looking at a US dollar strong in the coming 6 to 12 months.
Mr. Gyanashekhar, of course, winter session is, one development or activity which is keeping traders on the tenterhooks. What kind of commentary is coming out of it? But what are the other factors which are playing on the weakness of the rupee right now?
I think it's been a lot of oil demand, which is, essentially keeping the rupee weak over the last especially over the last few sessions. Coupled with this oil demand, I think there's been a lot of corporates also who've been panicking and buying on the back of the risk sentiment. Plus, you have some notification which has come from RBI lately saying that unhedged forex exposures are going to be very closely monitored by banks, and even that is also making corporates go and cover their open dollar exposures. So all this, a combination of this and the the reform process not really moving forward is sort of making dollar as a safe haven right now. But our feeling is that this sentiment could sort of peter off once some good news starts flowing in, and you could see a sizable correction, and that correction could come as low as 54. But in the very near term, clearly the sentiment is towards a weakening rupee, and 56 is quite achievable in the near term.
Right. Abhishek, surprisingly, it's the foreign investor community which continues to pour in. Even today's provisional data shows that around 300 crore plus has been poured in by institutional investors from foreign shores. How do you see the fund flows? Also, there were reports coming in that RBI has intervened in today's market, and despite that, we closed at the level we did. How do you see RBI faring in the next couple of days if this is how the rupee continues to weaken?
The stance of the RBI has been very clear in the last few months that they are not going to necessarily intervene to make the rupee stronger. They will only intervene in bits and pieces only to control market volatility intraday. And that is all. They are not going to intervene if we are seeing an excessive depreciation happening in the rupee. Because at the back of the mind, even they know that because of the huge current account, when the exports are falling, imports are increasing, of course the money is getting shifted to other markets. Look at the Korean won, the Philippine peso, the yuan, at all-time highs, the Malaysian ringgit, all are doing excellent. The currencies are doing so great. Look at the rupee. Rupee has been performing against 25 major currencies, underperforming against 25 major currencies. So it's in the back of the government and the RBI that yes, you cannot intervene in the market artificially just to control and make the rupee strong. So I don't think, in fact, we have studied the RBI figures and we realized that the intervention is not so much as it was used to be earlier. The interventions have been going down with RBI right now. Plus, a very interesting development, carry trade which used to happen in the US dollar. Slowly and slowly, we have started seeing the Japanese yen getting weaker. Of course, because of its own quantity easing policies, and also the interest rates are almost equal in both the currencies. Slowly and steadily, since the yen has started getting weaker, the carry trade is shifting from the US dollar to the Japanese yen. If any such development is happening, then of course the US dollar is likely to get stronger internationally.
Right.
That's a major development which is happening. So the yen goes to 87, 88 levels, and the US dollar index hits 84. When the index today is 80, half, 80, 60, 80, 70, like that.
Right, Abhishek Goenka, thanks a lot for joining us. Mr. Gyanashekhar, thanks a lot for taking time out and joining us on the show today. That's all we have for you on this edition of Hot Commodities. Thanks for watching. Rush Hour on the other side.